Because fundamentally, landlords have three options. You can keep your property, you can refinance your property and pull money out, or you can sell your property. So this brings up like a concept that I think a lot of landlords need to be aware of. Hey, paying taxes is not the worst thing in the world. I can make a case for, hey, you should pay taxes and go out there and reinvest in a better asset or something that's less time consuming for you. And I think this is an important thing to kind of start wrapping the podcast with, this mindset, right? It's the how can I, what can I do? How can I achieve my goals? Like, having that mindset is so critical. And so our goal with podcasts like this, our goal with the Fire and Fire classes and masterminds are always to go out there and show people how you can go out there and do something, and reports making sense to the market, and then people are actually going out there and taking action.
Jamin Cook here on the Fire and Fire podcast with Paul DeSalvo and Chris Lopez. We just wrapped up our Property Analysis Mastermind in January, speaking to around 40 or 50 firefighters who are either investors or are looking to get in the market. And so we're here to talk about some key highlights that we found in the classes or just talking to people. And so today we've got Chris Lopez with the Denver Real Estate Investing Podcast and Property Llama, as well as Paul DeSalvo, who is an investor and a big part of Fire on Fire.
Yeah, I love doing these podcasts. I really enjoy the mastermind guys. Because, you know, there's always the education out there, and we do a lot of that in the podcast. Obviously, I do a lot of that as well. Then it's always like, hey, what are people actually doing? And then that's where the rubber meets the road. So I always love this, where we can go out there and talk with a lot of people. And then once you talk with, 40, 50, 60 people, you start identifying trends and what people are doing. So in January, we did our Portfolio Analysis Mastermind, which is our annual event we do, really geared towards landlords. And it has three main goals. The first is helping landlords realize how is their current portfolio performing. The second is come back and revisit, what are your goals? Your portfolio has changed, the market has changed, your goals have evolved too. Get clarity on your goals. The third thing, understand what type of opportunities are available in the market today, because every year opportunities change. And we know the last couple of years, the market has changed a lot. It is stabilizing out now. And we discussed a lot what type of opportunities firefighters and real estate investors in general can get into. So I think we did 5 in-person and virtual masterminds, 4 or 5 together with lots of one-on-one conversations on there.
Yeah, lots of. Well, the mastermind, we met with people in person, and then with the webinars, people could show up if they wanted to, but we had a lot of traction there. And then outside of that, people started making phone calls and calling us or texting us and asking about what to do with their property, and helping them analyze what their portfolio.
Yeah, it's a lot of stuff. This has been great because we can start to see our dream that we wanted to, start this educational classes for firefighters specifically. And like Jamin said, we've had anywhere from 40 to 50 firefighters that we have made personal contact with and help them navigate through what to do with their properties once they get into Property Llama, look at the options they have, look at how their property's performing. And it has been amazing to see the shift in their head about what they're going to do with their property. Lots of people, sit there and think, I'm going to hold on to my property and just kind of ride out the storm. And, I'm not cash flowing very well. And then they look at the options and they're like, wow, there's some other stuff out there that I can do in this market to start cash flowing a little bit better. So that's been extremely fulfilling and satisfying that we're starting to see what we been working on for a couple of years now to start finally gaining some traction and people coming in and learning. I want to take an opportunity of this education that's free from experienced investors.
Yeah. So, I like these a lot because I think these are a lot of times the most applicable podcast and education to people. We're going to talk about 5 different case studies and also interweave in some market stats to explain why these investors are making the moves they are doing. So the first one here, and this is one we've talked a lot about, is, a lot of firefighters, they were smart enough to go out there. Hey, they bought a few properties along the way, a rental, a BRRRR, a house. Hey, they buy a property, buy 2, buy 3, buy 4. A lot of firefighters out there, landlords with 2, 3, 4, 5 properties. And now 2 things. They don't understand how to evaluate their portfolio. And secondly, like, hey, I'm looking to buy my next property and the numbers kind of suck right now. What should I do? Now, I know we had quite a few people come through here, and we actually kind of talked about before one gentleman who I think had 4 rentals. He'd house hacked a lot. Do you guys want to kind of recap where firefighters are at with that and kind of the paradigm shift they're going through and understanding how to evaluate their portfolio?
Yeah. So this one person in particular, which actually is kind of this avatar for a bunch of firefighters out there in the same situation. He bought a house, lived in it, and then rented it out and bought his next house and just kind of repeated that over the last probably 10 or 15 years. And now he's married, has a family, and wants to get into a bigger house, and he doesn't know that he can do it in the current market for Colorado. But during the class, what we taught people was to switch your focus from how much you're cash flowing every month to really looking at that equity that you have in the house, and is it working for you? And equity is stale unless you do something with it. So that's that paradigm shift for him and for many others is, I've got a bunch of equity. What can I do with it, and how can I make it work for me and make me some more money?
So I know, and that paradigm shift doesn't happen overnight. We had a few conversations with him. He came to a few masterminds. At the beginning, I got these, I think, 4 rentals, and they're all great rentals. They're cash flowing. They do have the red light return equity, kind of meaning, hey, they're not amazing returns right now. And I know you guys synced with him last week. Talk about his journey and kind of where he's thinking at, what he might do now with his rentals and his next investment moves.
Yeah, that's we're discussing the paradigm shift, and it's I've been there, where you're just not sure. You've always been taught that you buy a property, you hold on to it, you pay it off, and then you just continue to cash flow, and then that's it. And, to watch people, there's so many guys that I had no idea that had investment properties, just like myself. I didn't discuss it much while I was at the station. I didn't want to sound braggadocious about it. And I think that's the way a lot of the guys feel, is they don't want to brag about what they've got or talk about it. But when they do, they're actually helping other people that are in that room realize what opportunities lay out there, what they're kind of seeing. And then as they move through these classes, in the beginning, you see them say, you know what, I'm not going to move with my properties. I'm pretty happy with where I'm at right now. And as they see the return on equity and where they're at, from a real position, financial position, and analyze it, they start that shift, and they're like, wow, well, maybe I should sell this or refinance it and get into something that's going to make my money work a little bit harder for me. So that has been extremely interesting to me. And that's where I think this is the value from what we're doing is really coming to light.
Yeah. All right. So, and this is a great thing. For firefighters and really any landlord out there, is understand how your property or your portfolio is currently performing. As you said, Jamin, it's not all about cash flow. You have to look at, hey, you have equity in the property, which is your real estate piggy bank. How hard is that money working for you? And also, what's your cash flow on equity? When a lot of people look at it in the current market conditions, it's sub what the stock market historically returns. And a lot of times that's not an attractive investment for you have to go out there and actively manage it. Now, with that said, moving on to the second avatar here, a trend that we're seeing a lot of, not just with firefighters, but just landlords in general, is selling a few of their rentals and then reinvesting the money in alternative investments or more passive investments rather than a directly owned piece of real estate. Now, Paul, I know you've done this yourself. Both of you guys have guided a lot of people. Can you give us some more color around that avatar?
Yeah. So I came here when I found Chris Lopez. I was listening to his podcasts and trying to figure out what I needed to do with my properties to get to that next level and continue to make my money work hard for me. And, at that time I have multiple rentals right now. Well, still do. And then the natural grocers that I have in Dubuque, Iowa, I'm looking to sell that. And I was going to 1031 into another, multifamily or triple net, but those numbers just aren't working right now. My interest rate is extremely low on that triple net. And, looking at where interest rates are right now, it doesn't make sense. So sitting down with Chris, we started talking about syndications, alternative investments in real estate, debt funds. And I realized that, this was a really good opportunity right now in this market. To have group in with multiple investors and make your money work for you without having to do much work at all. Really, it's doing the due diligence, but hopping into these opportunities, there's a lot out there. You've got to do your due diligence and look at what's available and what's going to be best for you and what your risk tolerance is, what your goals are. That's what we do, is sit down with them and try to, show them what the opportunities are out there. And that has really come into focus, not just, for me, for a lot of people that haven't even heard of these before, and their eyes are opening up going, wow, you mean I can make, a 10% return on my money? And then at the end of IRR of in the mid 20s, that's a great return, rather than throwing it in the stock market. I'm diversifying my money and spreading it out across multiple different types of investments.
So, we talked about here, people are selling and, reinvesting. And this is a really good thing to talk about here. People, portfolios and properties, we're not just saying sell for the sake of sell. We're saying sell because that's what the market kind of says, hey, this is the best thing right now. Hey, you plug it in the spreadsheet and the spreadsheet says, hey, this is the best path forward for, should be the highest returns for less headache as well. Because fundamentally, landlords have three options. You can keep your property, you can refinance your property and pull money out, or you can sell your property. Now, keeping the property a lot of times is a great decision for a lot of people. Depending on if it's a headache property or if there's better use for the equity in there, it may make sense. It may make sense to extract the equity, pull it out. As you said, Jamin, equity in there, it's stale. It's not working for you unless you pull it out. So it's that double sword. Hey, should I pay off the property? Or if you want more cash flow, you may have to pull the equity out and invest more money out there. Well, the problem is if you try to go out there and refinance your property, do like a cash out refinance, pull money out, since interest rates are 7-8% now for cash out refis, the numbers don't make sense. And I don't want to get too technical here, but for a lot of the properties in Denver and other markets, we've seen what's called a cap rate, which is how you measure a rental property performance. Cap rates are on the 3, 4s, and 5s for a lot of people's current properties. And then interest rates are at 7 or 8. When your interest rates are that much higher, 2 or 3 points higher than a cap rate, you're essentially at negative leverage, which is not the ideal way to go. Now, taking it back to the previous market cycle, so 2010-ish to about 2022-ish, we were at positive leverage. You could buy properties, going all the way back to then, 7, 8, 9 cap rates easily in Denver in the early 2010s. And then your interest rates were in the 4s and 5s. And eventually they dropped a little bit lower than that. So you're at positive leverage. And that's how so many of us went out there and build wealth, or we extracted money from our properties to go out there and buy more. I know I've done that. Paul, you've done that. Many investors have done that as well. And then the third option is, hey, you can sell the property. And this is where when you're at that negative leverage, we're at where you have a low cap rate or a low performing rental, but a high interest rate environment. A lot of times that makes sense to sell the property and then go reinvest somewhere else. Now, what a lot of people did in the last market cycle was they sold their property and utilized a 1031 exchange, which means you don't pay taxes today. You kind of just defer them down the road. Very similar to selling the stock in your 401k. You can sell a stock, pay no taxes, and reinvest. And eventually you pull the money out, you'll pay taxes in 40 years. Very similar concept to what 1031 does. Again, but we have the same problem. Hey, if you sell the property and do a 1031, you're buying a lower cap rate property with a higher interest rate, and you're at that same negative leverage. And then you go out there and spend all the time and transaction costs, take a new risk with the property, and you're like, okay, from a cash flow perspective and return perspective, a lot of times it's a lateral move or a very marginal improvement. And it's like, well, it's that may not be worth it. So this brings up like a concept that I think a lot of landlords need to be aware of. Hey, paying taxes is not the worst thing in the world. I can make a case for, hey, you should pay taxes and go out there and reinvest in a better asset or something that's less time consuming for you. And so a lot of people say, oh, I can't sell and do a 1031. I shouldn't sell. No, I wouldn't say blanket no to that. I would say look to other options as well where, hey, you could sell and maybe pay some taxes, all your taxes, but see that new investment, is that going to be a better rate of return? And is that going to meet your lifestyle goal? Like going back to the gentleman you talked about, Jamin, where, hey, he's got, I think, 3 or 4 kids now, young family. We all know that's, busy. And he's like, yeah, I want to go out there and buy more real estate. But if I go out there and buy more real estate, I get poor returns. And unless he wants to go out there and spend 20 or 30 hours a week on there, which he can't between a job and family, it may make sense to just pay taxes and reinvest into a passive or alternative investment.
Yeah, I think we're kind of in this perfect storm for investors, right? Where you have high interest rates and flattening rents. So it makes it difficult to 1031 into something and make it profitable. And for him, I think it was the realization that he could do less work and be more passive and invest into maybe one of those funds, the debt fund or an equity fund. So he was excited about that. And I think there's a couple other guys that are super interested in doing the same thing.
Yeah. And again, we are not giving investment advice on here. We're telling you what, hey, we are doing, the trends we're doing, other people are doing out there. I'm a big proponent, as you guys are, about education and a little devil's advocate. Hey, we all get tunnel vision on this, but look at these other buffet options as well.
Yep.
That may make sense for you. Check it out. If it doesn't, that's great, but at least you looked at it, right? And so some of these options are where people can, sell and then invest in an apartment group and go buy an apartment building right now, but they're essentially a stockholder or a limited partner in there, or invest in a debt fund to higher cash flow. So there's a lot of alternatives out there right now. It really depends on what makes sense for you and your risk tolerance. But that is a trend we're seeing, is where a lot of people are selling one or two properties, not their entire portfolio, but one or two. Say, hey, this property, it's past its highest and best use, or hey, it's a pain in the butt. Or another amazing opportunity for people out there is if you've lived in the property out of the last 5 years, you could sell some of these properties and get what? Capital gains free. You don't pay taxes on there. Now, there are some limits on there, but if you're in an option like that, which I know a lot of investors are, that's an amazing tax break. You can get $250,000 or $500,000 tax break from Uncle Sam. Yes, please, right?
Yeah.
I mean, Paul, one of your strategies is you're moving back into a house or to a rental so you can do that in the future, right?
Yeah, absolutely. That's what's working right now. And when I started investing starting back in 2014, that market situation was appropriate to go out and buy apartment buildings, which I could do on my own. We took the refinance out of our rentals and our primary. And that was working at that time. That was working for a lot of investors. They're going out and buying apartment buildings. And the next year and a day, they're selling them, doing a 1031 into the next apartment building and growing that portfolio. That worked great during that time. That doesn't exist anymore. And that's probably the question I get the most from a lot of firefighters are like, hey, how did you do that? I want to do that. Well, that's great, but that doesn't work right now. But if you want to do that, you get into one of these alternative investments where you invest with a group of people and you have a GP that is very knowledgeable in that area, knows how to manage it, knows how to buy it at a good rate right now. That's super important, and know how to underwrite it. And a lot of people if you're not attuned to the market, which we're finding out a lot of firefighters just don't care about, and they don't watch the market trends, and they just are holding on to these rentals thinking it's, they're doing great. But in reality, when you put it down on paper, they're starting to see these returns and going, well, what else can I do? And, like we said before, they just don't know what they don't know. And, that's what we talk about is their options. It's perfectly fine to keep some of those rentals. But at the same time, if you want your money to work for you, you got to start looking at either potentially selling it, refinancing it, or doing something else.
Now, we talked about some options here for current landlords with properties and equity. And of course, we had quite a few people say, hey, I don't own any properties right now, but I want to get into real estate investing, right? There's you either own a property or you don't. And there's a lot of people, hey, I want to get into real estate. So some other interesting trends and opportunities that make sense in 2025. The first one is we had this gentleman, I think it was last week at our last mastermind. He's got two kids in high school, I think 15 and 17. He and his wife, they've been smart. They've saved a lot of money. They've invested in stocks, their retirement account. They're like, hey, but we want to get into some real estate. And then once they saw, the real estate market, like, well, hey, buying a rental right now, it's not that attractive. Well, a great opportunity right now for people in that situation where you're an adult, an established adult with a kid about going to college, is you can do a joint investment with your child. Because one of the strategies that works in the market right now is doing a room by room rental property. Hey, go get a 4, 5, 6 bedroom house and then go rent out a room to Jamin, a room to Paul, a room to Chris, and then 2 other guys. So it's a great strategy, but it takes a lot of hands-on management. Well, this gentleman didn't want to, but we came up with the idea of, hey, when your kid goes to college in a year or two, go out there and buy a house with your kid. And this is where we merge a couple of things. From an investment perspective, your son or your daughter will be on property title, so you can get this amazing lower down payment, like a 5% down payment versus a 25% down payment rental down payment. You'll get a better interest rate. And then so you, as the parent, you're putting down the capital. Your son or your daughter is getting experience and building credit out there by being on there. But then you're merging these strategies where your son or daughter, they're essentially the property manager, right? Hey, I lived in college rentals with 4, 5, 6 roommates at a time. I rented, we didn't buy though. But a lot of parents like this because it's like, wow, here's a way I can start giving back to my kids, help them get off and start off on a good financial foot, but also start teaching your kids real financial metrics. Start teaching them about, real estate investing, and it's essentially a partnership. So it's good for the child, it's good for the parent, and it makes sense in the current investment cycle. So I love that strategy. And like he walked in there, no clue. I think halfway he's like, oh my gosh, here's an idea you could go for you. And now I think he's pretty hot to trot on it, right?
You actually could see the light bulb go off in his head. Like he was getting more interested, taking notes, and and then after class, he was talking to me more about it. Like, now I know what I'm doing. He's like, I was thinking about it. I wasn't sure if it was a good idea, the right thing to do. But after meeting with you guys and looking at the analytics, the data, and the return I could potentially get, and the very most valuable is teaching my kids about real estate and how to manage projects so they get an education, not just while they're going to school, they get an education about real estate and doing it hands-on. And I think that will lead them down a path to success later on in life for sure.
And then this is where what he's doing is I think the rough plan right now, and that we've had multiple, clients, investors do this, hey, they're going to partner with their kid on a house. And then he's got some other capital as well. And then he's looking at like a debt fund investment for cash flow and diversification. And he's also done a great job saving. And so, hey, some money for down payment here, some money for this year. And now there's 2 great real estate investments that fits the market cycle, fits his risk profile, and also fits the capital and time he has.
Yeah.
All right. So the next strategy, we have talked a lot about this on and off, but it's new builds. New build constructions. We've all seen them go up from, infill in, Old Town Littleton and Denver, which are, hey, go buy 3 or 4 homes, put up then 15 or 20 townhomes. We all know what's going on in Parker, where it's just, new construction as far as you can see. There was a gentleman last year that got an amazing deal on a new build. Can you guys share the details on that? I think that was your colleague, right, Paul?
Yeah, a good friend that, been friends for 20 plus years with this guy. And we talk about real estate a lot, and he has dabbled in real estate pretty much as long as I have been. He's done rentals here and there. They've done a house hack before where they lived with about 6 guys on the department. They bought a house out in, Trailmark?
Trailmark.
Yeah, out in Trailmark. Called it the Blue Ghetto because that's where all the firefighters and police officers were buying houses at. But great conceptually. It was, an idea like, hey, let's all buy a house together and we'll all move into it. And, this is where his real estate career started, was house hack. And it didn't work out so well, but, they had the right idea. And, they learned a lot of valuable lessons. And since then, he has done real estate and done very well. He's got a house currently out in Parker right now that he also rents out his basement to another firefighter, a Denver firefighter. So he's doing very well on that. And then we were talking back and forth. He was looking at a new build, called me up and said, hey, does this make sense to do? If I keep my house and he's got a VA loan on that. So that worked out really well for him. And then a new VA loan on the new build. So we ran the numbers, crunched them. He told me where the current price was. And this is, probably 6-7 months ago when we first started. And I just said, listen, you've got to make a price and hold on to it for the number that works for you. Go in there and start negotiating, because builders are willing to negotiate right now. They've got a lot of concessions they're willing to offer, especially with a loan. And if you can get that price that you're pushing for, it will be a really good investment. And so he did exactly that, and just held strong on his price. I think it was starting out about 1.2, and he ended up around 950 and ended up purchasing the property and then renting out his house.
Yeah, let that sink in. So this was a $1.2 million new build in Parker. So a very nice home, right? And then based on the market dynamics and builders just needing to get inventory off their books, he got for $950,000. I mean, that's a 20%, mid 20% discount right there.
Yeah.
Plus, I know we got some other concessions from the builder as well.
Yeah.
I think he's living in there, and then he and his son are building out the basement and apartment suite.
Yep.
I might be wrong. Is that the...
Yeah, that's the plan. And then to hold on to it for anywhere from 2 to 3 years. He's got that 2 out of 5 years that, when you move out of it, he can take those capital gains and tax free. And then his plan is to move back into his house, just make a little bit of money. But plans after that, I don't know. But I mean, for right now, it's working. That is an option, an opportunity for a lot of people. If you got the money, maybe you can rent out your house, or if you're renting right now, you got a little bit of cash, just buy that new build, hang out it for a couple of years, let it appreciate, and turn around and sell it, and do the next thing, do it again.
Yeah, and of course, always run the numbers, and there are two ways to look at that. Someone will say, "Oh my gosh, you went from 1.2 to 950. What an amazing deal! I want to buy that." Other people are like, "Oh my gosh, prices are falling. I don't want to touch it."
Right.
Both are legitimate perspectives. I always like to go back and look at data, though. If you go back and look at the peak of the market in 2006, 2007, before the big crash, and then if you bought the absolute worst time before the 2008 crash, it took about 5 years for prices to recover. If you bought the worst time and then waited 5 years and sold, you still made a small profit. Now, I think those market conditions are way worse than we're facing right now for single-family homes. That's my prediction on there. So go back and look at data on there. But I like to play. If you can get a great deal today, you're gonna live in it for a couple of years, and if you've got a 3 to 7 year hold time frame, I mean, high probability of when you go to sell that, market conditions will be a lot better. Prices will have rebounded a lot, and great chance you're gonna sell that and make a nice profit on there as well.
Yeah, he went into this eyes wide open. We talked about that.
Yeah, he's a very smart investor.
Yeah, he thinks about it. He's very smart, runs through all the scenarios. And we did discuss that, potentially that prices could still continue to drop down. If they're selling your house for that much, there's other people, smart people that are doing the same thing as you are. And so that will drive the prices down. But it's also a good thing that you're getting in cheap. If you've got flexibility to stay there anywhere from 2 to 7 years, you're right. That the averages, you're going to make appreciation on that. You're going to make money. So if you can ride out the storm, great. And that's what you want to run, is the worst case scenarios. And if this happens, what is my exit strategy? So go into it with an exit strategy, knowing that you may have to stay longer than you originally planned. And if you're good with that, go for it.
And last but not least, the last trend that's popped out a lot is just continued house hacking. Now, Jamin, I know you're a big proponent of this and you talk about it all the time, which is the opportunity for people to buy a house near their fire station and then do a room by room rental. Can you talk about how, what's going on with firefighters and why that makes sense in today's market?
Yeah, so the example I can give is my personal example, and that we're recruiting firefighters from all over the country. And not only that, with the price of homes, it's cheaper to live in Nebraska. It's cheaper to live in Wyoming. So men and women are commuting further and further. So the opportunity to house hack, just in the last 4 months, I had a firefighter that was in the academy from Wyoming, living in our house, and paying rent. And it worked out for him because he didn't have to commute the 2 hours or hour and a half from Cheyenne into town. And if there's a snowstorm, he was good, right? So I think that there is an opportunity for other firefighters out there who own a house, and it all depends on your situation, your comfort level, but the ability to get into a new house and rent out the rooms to other firefighters and help either eliminate your mortgage payment or reduce what you're putting out every month.
Yeah. So I'll add on there. It's a great opportunity for people like you already own a house. And it's also a great opportunity for like newer and younger investors who say, hey, I want to go out there and get my foot in real estate. I want to go out there and start building equity. They can go do the same thing. They can go buy a house for 5% down there. You live in Littleton, right? Great area, high cost living, right? Houses are not cheap there. Go buy a house for $600,000, $700,000, and then rent out 3 or 4 bedrooms and cover, most or all their mortgage. So they get to live where they work. They get to live in a great neighborhood, but they're also starting to build their rental portfolio as well.
Yep.
So those are kind of like the 5 trends that we all saw that popped out after the last 40 or 50 conversations. Now, while we were doing these Fire and Fire masterminds, we're also doing, I've been doing this for quite a few years now. I was doing very similar things with just, real estate investors in general. And we had the same trends. Like, this is not unique to firefighters. This is not unique to first responders. This is just the state of the market here in Denver, in Colorado Springs, in Austin, Texas, and Salt Lake City, and many other markets where we've seen huge appreciation. This is where, hey, the market is what it is, and all we can do is adapt to it, because the market does not care how much we bitch and moan about it. We need to go out there and say, all right, market says this. How can I go out there? And I think this is an important thing to kind of start wrapping the podcast with, is mindset, right? It's the how can I, what can I do, how can I achieve my goals? Like, having that mindset so critical. We all have that. Successful people have that. So make sure you carry that mindset into real estate investing, because you can go out there, look at price. You can go out there and read, the Denver Post and Zillow headlines, and it can get depressing. Yes, but there's always an opportunity. And so our goal with podcasts like this, our goal with the Fire and Fire classes and masterminds, are always to go out there and show people how you can go out there and do something, and reports making sense to the market. And then people are actually going out there and taking action.
Yeah, I agree. You got to go into it with a business plan. You've got a rental that is producing money for you. It's a business. So I don't care if you got 1 or 50. You should have a plan and goals and what your strategy is. That was one thing, like when I wrote down for the 2024, your real estate investing book, that's the first time I've ever written out a plan before. And that was something that was really eye-opening for me, is once I wrote it down and looked on paper and held on to it, that, hey, this is my plan. I got to stick to it. And, if you're watching the market and understand it, which you should, because if you've got a business plan, you should understand your environment that you're investing in, that your business is in, and have a plan for that. And like right now, so I've got a strategy to sell a condo, the triple net, and that is still on course, and to reinvest that into alternative investments. So yeah, I mean, that's the smartest thing I can say to people, is that, write it down, and that'll help you attain your goals. And, you just stick to your plan. Maybe the market will change and make it flexible. Then you can always change it too.
The market will change.
Yes. Yeah. Absolutely. 100%. But yeah, I mean, at least you got an idea, and if it, stays the same, and you're according to your goals, you can always sell, or you can change it and go a different direction.
And I think after you have your plan, the next thing, and you touch on a little bit, once you've developed your business plan and your strategy, and your exit plan, get involved in a networking group, because we're all talking about what's going on in the market today and what the future looks like. And that's the only way to stay up on current topics.
Yeah. So, I mean, if you're a firefighter interested in investing in real estate, make sure you're plugged into Jamin's and Paul's email list and a class schedule. There's usually a class or so a month. There's some in-person masterminds, and I think those are the most fun and usually beneficial for people. A lot of mass education through podcasts and YouTube videos, but hey, the in-person masterminds and happy hours often provide so much value and paradigm shifts for people. So make sure you're plugged in there. They can hit you guys up on Instagram. Go to your website, right?
We got Instagram, the Fire and Fire Investing, and then we have our Gmail, Fire on Fire Investing at Gmail, and then we have our website, fireonfire.org. So this is a great community. There's a ton of people from all the state joining us now. We're getting great traction. It's a great community to be a part of. You learn so much, not just from us, but from other investors, what they're doing, what their goals are, and how they got started investing, and what their plan is. And you can learn so much. It's so valuable. You might even end up partnering with somebody in this group on buying an investment, which is happening right now. A lot of people are starting to talk with each other and planning their future of investing together, whether it's flips or doing a house hack together and starting off that way. But there's dozens of ways to do it. And just, give us a call anytime. We're an open book, and look us up and get free education and information.
Yeah. And if you can't go to one of those classes, on our website, fireonfire.org, you can schedule a call. It's a video call. So we can get in touch with you one-on-one.
Yeah. And plus, I mean, you guys are also building like a really great community of like other professionals and subject matter experts. Hey, you've got a financial planner. Hey,
Right.
he's a retired firefighter turned financial planner. You've got some investor-friendly lenders who are firefighters who are lenders. We're in the early stages of planning out, a really robust class education schedule with the credit union that I can't ever pronounce her name.
The Denver Firefighter Federal Credit Union.
Denver Firefighter Federal Credit Union, yes. So lots of like really cool stuff where, this is where, hey, we all know this, like the group, the community is greater than individual inputs. So, 1 + 1 + 1 = 9. And so what you guys are creating here is very powerful. The passion is amazing. And you're combining just, hey, how to invest in real estate with a niche of, hey, how can firefighters and first responders get into it or go out there and accelerate their portfolio?
Yeah, it's been great.
Cool.
Thanks for your assistance.
Thanks for everything.
Oh, this is fun, guys.
Yeah.
Jamin, great job today. Paul, great job. Look forward to doing more of these.
Great job as usual, Chris. Thank you.
Great. You guys have any questions, let us know. Otherwise, we'll see you in person or in a future podcast. Bye, everyone.